Hello, traders. How's everyone doing today? Didier, Brock, how are you? Marco, Sa, dollar broke to new lows here. Hi, Irina. So Dixie down hard, right here. Okay. New highs for Euro. I was wrong yesterday. Stopped out. Okay. And the only currency that hasn't done this, like, the pound has done it as well, is the Aussie. I mean, look how far off the highs it is still. This kind of looks like an ABC. So I'm going to ignore the Dixie because that would tell me to, be long Aussie here, right? Very little to no divergence here on the Dixie. Something interesting. So my turnaround Tuesday candidate is Aussie. I'm trying to short here at the 78 level, looking for 76, risking 60. And silver here at the high of the day. Look at this. Get a better view of it here. Or on the daily. We're at 78.6 back right here. The gold is got to about 50% back. I'm measuring the fibs from the high of the move over 2000. So we're pretty close to the 50% level here. So be careful there. Hello, Jorge. Getting some follow through, but the S&Ps. Is this a failing rally up here at 41.85? We'll see. Oh, hi, Alex. How are you? Yeah, we changed the time, so you're up in 28 minutes. Hi, Sinatra. So Canada, I believe, is at new lows here. And we are diverging in Canada here. Nice on the 4. Not so great on the 2. 15. A little bit. Daily. I wouldn't be short here anymore in Canada. So oil, are we at new highs yet? We're at new highs here, but not at new highs here. So pick your poison. I know it's high risk to, short the crude oil with what's happening in the Middle East, but this actually looks kind of interesting to me on the 4-hour that we've cleaned the stops out over the double top and we get back under 6.5. Perhaps we have a false breakout here. So any questions on what I'm seeing here? Yeah, stick around for Alex. He specializes in the DAX. We'll see what he's saying. I think DAX has been outperforming S&Ps lately. We'll see. Almost everything's outperforming NASDAQ. So S&Ps and NASDAQ look like different charts. I still think we have a chance by month's end, especially if the dollar continues to be weak, right? For the S&Ps to maybe generate another high. Didn't look like it down here, but I kept an open mind thinking that we could, and we had that big Friday. Not much this week, but if you just take this range right here, call it 150 handles from here, is going to give you 43.30 if we break out over this 85 level, just based upon this wave right here. Okay. And Blake knew the dollar just can't find any footing. I guess the guys looking for 88.5 are going to see it pretty soon.
Yeah, I mean, it seems like it. Well, I guess one of the things that really weighed on the dollar, and this is when we were at the daily roundup yesterday, we talked about how the dollar was weak. Stocks were actually, just kind of holding.
Right.
Gold was strong,
Yeah.
yet Bitcoin was at the lows. So we were in the chat room. We called it a good old Mexican standoff, which it was. It was really one of those situations where we weren't sure who was gonna break first, but it obviously is the dollar, and the dollars come under some pressure. So
Yeah.
I'm not surprised, and I'm not surprised that actually because I'm not surprised because the crypto market really bounced where it should have. So if you look at like Bitcoin, Bitcoin completed an AB equals CD right at the big 2021 breakout point, and we were just sitting down here yesterday. And I'm like, if Bitcoin doesn't break down, it's going to eventually bounce and take risk back up with it. And both Bitcoin and Ethereum bounced from the 50% retracement. Bitcoin bounced from the 42,000 level, and then gold rallied past the 618 retracement yesterday. And when it rallied past the 618 retracement, you can actually see gold is pushing up against that trend line that Stelios talked about yesterday. Some pretty big resistance here, but the dollar, was weak yesterday, and I was fearful of that. I was, telling all the traders in our chat room, I'm like, the dollar it's not looking so hot. You had the dollar Canadian that couldn't get out of its own way, that actually was we closed at 120.60. Now, I'm actually surprised the dollar Canadian's not weaker than it is, weaker than it is, because it was actually pushing down here in Asian trade. So, it's the dollar. The way it seems like right now, Dale, is the dollar is just kind of it's like a relay racer where you have the baton, and you're passing the baton from one runner to the next. And you've got the dollar Canadian, like, was weak last night, passed the baton over to the dollar Mexican peso. The dollar Mexican peso passed it over to the euro. The euro rallied to new highs. And matter of fact, the euro's this is 127% extension right now. And you're seeing the dollar actually hit a lot of those. Here's the cable, 127% extension. Also trend line resistance here at 142.15. The euro dollar is testing it as well. So a lot of, and here's the Aussie dollar. This is actually pressing up towards the 618 retracement. A lot of resistance being tested right now, and supports on the dollar. So yeah. So anyway, that's what I see with the dollar. It just looks,
so maybe you don't press those short side of the dollar here then.
I mean, I think there's still some downside unless we see metals roll over. Now, I want to show you something with silver, and I know Stelios he's gonna
I'm already excited.
You have a fib number up here, Blake, at 2870. Yeah.
No, well, it is. It's a 78% retracement, but I think more importantly is silver. If you haven't seen it, let me
reach an objective off that formation.
Yeah, well, this is the
nice.
Yeah, COVID lockdown lows.
Right.
So you take that trend line.
Yeah.
And I guess I'm gonna have to let me delete some of the stuff just to make it a little bit more clear here about how important this is.
By the way, talking about the dollar before, the DSI is in the teens now. The Canadian is at 88, so I think we might see. We're getting towards oversold and bearish conditions in the dollar overall. So just
that's a great point, Stel. And so,
Yeah,
so you
what
can
was the
see-
euro still? About 80, 75 or
Let
80?
me check. 74.
Mm.
okay. So here's silver at the 78% retracement, and I guess we should probably just do this so you can see all the places that we've hit. Okay. And so you can see at the underside of this trend line, or this trend line just in general, this is where we, have some friction, if you will. And this is a 78% retracement of the 2021 high to low. And it is pushing some resistance. And I guess when I look at silver, I'm surprised that silver hasn't broken out with the rest of these rest of the commodity market, and so what do you have to say about that, Stel?
I think a correction is very possible now, because remember, we've gone from March, well, actually April, below $24 to 28.5, and it's been pretty much a straight line.
Guys,
And
I have to warn caution here because
yeah,
we've seen all these assets, and many times people have been expecting corrections and then they go in a straight line.
well, they could do, but I think I think a correction could happen, of course. And regarding other metals and commodities like platinum, palladium has been on an absolute tear. And
Yeah,
yes,
it has.
silver and gold have been underperforming. And silver is actually outperforming gold this year because it always outperforms on a rally. But yes, they're lagging behind. And the question is,
just so you guys know, Steve got his first vaccine shot yesterday.
I did.
He feels horrible today, and he's still here with you guys, which we begged and pleaded with him not to come in today, and he still got up and dragged his butt out of bed to come to come say hi to you guys.
Well,
okay.
his arm hurts, but his cat is handling the mouse for
No,
him.
the arm is not the problem. I have like flu symptoms, which are
okay.
annoying, like headache and a little bit of fever, but nothing, nothing really major.
All right. Well, so Steve, now that you're here, we were just talking about how weak the dollar is. And yesterday, like I mentioned, for those of you that are just tuning in, you had Bitcoin at support, you had gold above the 200-day moving average, and the dollar was weak. So it's like, okay, who's going to flinch first? And it looks like the dollar has. Jim Welsh, he's been looking for a move in the dollar index down towards 88.5, which is would take us to new trend lows. And he's not the only one that's been looking at that. There's a few people that have been looking at that. So what are your thoughts
I hope
here?
you're not expecting a counter argument from me, right?
What's that?
I hope you're not expecting a counter argument from me. I've been bearish the dollar for a long period of time, and I really see no reason to change that.
Yeah. So
I mean, everything points to more weakness. Everything for
yeah,
them.
I mean the dollar does look like we're going to head back down. I mean, I guess when I look at the 88.50 level, so I've heard, again, this is not just me. This is and this is not just a few people. Or a couple people. I've actually seen a few people target 88.50. What is the significance of that level that you guys see? Because I don't see it, and I mean, and I don't say I can, see everything anyway. So I'm not gonna sit here and go, oh, this is, of course it's this area. I don't know where it is, and I don't know why people are targeting that area. I guess maybe
there is a very, very important confluence of supports. According to my chart, it's a little bit different. It's at 88.25, but 25 pips, of course, in long-term scale is literally nothing. If you zoom out in the chart quite a lot, you'll see that it has been resistance and support and congestion area in the past 3-4 times. And it's also the 50% fib exactly from the 2011 low to the
Maybe that's it.
2016, 2017 high.
Yeah, maybe this is it. Maybe it's like, let me make some adjustments here. So, I mean, there's a 50% retracement. It just because I'm like, okay, well, how will we not see 88 and a quarter? I don't know where 88.50 is such a big deal. But then again,
and look
guess
at these congestion areas on the left side of the chart. First of all,
yeah, if you take the highs from like
yes,
and
that area,
here,
that area, yeah.
I guess there's a ton of support through here.
Yes.
But again, I'm just going to reiterate. So I hear this 88, everybody's like 88.50, 88.50. I'm like, man, where did everybody come with this number? I mean, I see like a big area of support between like, these levels, and I've seen it. I'm sitting there going, but why 88.50? And I don't know. Maybe I should. You know what I'm going to do? I'm going to go hop on the phone, and I'm going to go get one of these guys on their on the phone, and I'm going to go figure out exactly why they see this.
Yeah, why not? It's a good 5-minute interview we can add on Trader Summit, like
Yeah. Speaking of which, if you guys haven't checked out Trader Summit, a lot of great. If you go to the breaking views down here, obviously these are some of the headliners that we put up there, but the breaking views is all the like newer content that has come out. So a lot of good stuff out there. So and there are a lot of people that have been here as guests that continue to post on there. So Stelios, you got the precious metals moving higher today, or actually yesterday. Gold has finally hit your resistance. Let me get over to gold really quick. You had pointed out yesterday, and this is we were not above the 200-day moving average at that point. We were still, just kind of pushing up against some the 200-day actually. So here we are at this trend line resistance, and frankly, it doesn't look like it's backing off. So what happens if gold breaks, 1875? Where do we go from here? What do you think?
Good question. Frankly, I think we're going to gun towards new all-time highs. We have to. I mean, if you look at asset inflation everywhere else, it's just anything dollar denominated is just going, and fundamentals are still there. So I have no doubt that we'll eventually reach all-time highs. Silver a little bit more difficult because they're 100% higher from here almost, but I think it's very constructive. There might be a reaction lower, of course, but for people who have been on the chat room and who are following me, I've been long gold, silver, and gold and silver miners for a while now, and they've done really well. So, I'm lucky enough to be in a position where I'm up quite a big chunk, and I have the flexibility of being a bit less stressful about a potential downturn if it happens. But so yeah, I think we might come back a little bit, especially if the dollar tries to muster some kind of a rebound. But I think we're going a lot higher.
So let me just point out a couple of things that we see with gold just in general. I want to just point out a couple of things. This relative strength has actually gone overbought today. We are above the 200-day moving average. We're above the 618 retracement. I would say the combination of what I just said, above the 200-day moving average, above the 618 retracement. If anybody was short gold yesterday, they probably have closed out or have been squeezed out now, because you had a double bottom target. We reached it. I mean, let's just go back into the mind of traders last week. I'm gonna take you into gold traders last week, which I wasn't trading gold, but let's just imagine. Okay,
mind meld.
Oh, I'm sorry.
Do a Vulcan mind meld.
Yeah,
I love it that you're a Trekkie.
I'm actually opposite of Trekkie because I'm a Star Wars guy.
Why? I mean, they're not Yeah, they're not mutually exclusive.
I just never got into it. And by the way, if you guys,
vulcanized tires, right?
I have to point this out. If you have been watching the YouTube videos that I've been doing in my office, and you see a life-size Boba Fett in my office, it is a life-size Boba Fett in my office. Just so you guys.
As simple as that.
It really is. Yeah. Sansi says Blake's too young to be a Trekkie. No, that's absolutely not true.
It depends
50
on which
I'm
Star
almost
Trek
50
we're
years
talking
old.
about.
Yeah, I grew up with Star Wars and Star Trek, and I lean Star Wars. You know, I think a lot of people that grew up in the 70s, they lean one direction or the other.
You
So,
know, I know it's as sensitive
anyway.
of an issue as religion almost, but I'll tell you, despite liking both of them, I'll tell you why I prefer Star Trek, and we'll end this conversation there.
Don't even go there. Don't even go there.
Because
Are
it's
you-
a lot more realistic. Meaning they've even
I hate
decently predicted how some
hate
things
you.
are going to go in the future. Tablets and tons
Okay,
of things.
just because you had a flip phone and you thought it was cool back in the 1990s does
Okay,
not mean anything.
we're sidetracked a little bit.
All
but
right,
yeah.
sorry guys. Yeah, okay. So let's go
It's
back.
totally
into the
Blake's
Vulcan
fault, not mine.
Steve,
Totally Blake's fault.
Hold on. Let's go back into the Vulcan mind trick of gold. So you see gold, we completed a double bottom. We hit the double bottom completion last week. It started to roll over. So if you were looking to short, you're like, okay, I got the 618, got the 200-day moving average. I'm going to short gold. And this is last week, right? It rolls over. It completed its double bottom, 200-day and 618s just above. So you get short, and then all of a sudden, yesterday, it's up in your face. Now, it breaks above the highs. It breaks above the 200-day moving average. It breaks above the 618. You have to cover your short, right? If you shorted it last week, right here on this red candle or around here, you know, around the 1840 level, you were forced to cover yesterday. So now the market is a lot less short gold right now, position wise from a trading standpoint. So here we are at a key resistance. I would venture to guess this: if we get back below 1845, I think that's going to open the door for a fresh shorting opportunity. I doubt we're going to do that. I'm just going to say that if we get back below the 200-day moving average, we close above it or below it, we close above all this previous resistance right here. Let me move this blue line. We close back below 1845. I wouldn't want to be long gold anymore. I'm just telling you because I think a lot of the shorts got squeezed from last week. And I think I see the reasoning why they would have been shorting it last week too. Even though I didn't do it, I'm just saying I could see why they would have. So if we get back below 1845, I think that you don't want to be long anymore. That's just my 2 cents. And then you could also say that, you know, hey, we hit Stelios's, you know, trend line resistance and rejected it. Now, I think today is going to be a pretty big day for gold, because if gold can break above 1900 today or 1890, I think that it's like well on its way higher, like, you know, here in the coming days. So anyway, just thought I'd point that out. Stelio, Steve, what other comments do you have before we turn it over to Dale? Dale's got a really exciting interview today. I've heard, by the way, I'm not sure what his name is, Dale. The DAX.
Alex.
Is it Alex?
Yeah.
Yeah, he's. I know I listened to him last time, and I actually enjoyed his interview. I must have missed his first one, you know, whenever that was, or whenever you've had him on before. But I know a lot of people are waiting for him. So just it should be a pretty good interview for those of you guys that are waiting. He should be up in about 6 minutes. But Stelio, Steve, any other comments about the markets that you want to break before we're? Oh, I do, because if you don't, I do.
You're pregnant.
No,
I am pregnant.
They asked me
I'm
that when I was
pregnant.
about to get the shot. Anyway, no, I don't have anything else. I'm looking forward to hearing Alex. I follow him on Twitter. I really like him. No, I don't know if you have something to say, Steve.
No, not really.
Oh,
Okay. So I want to point this out. So here's the Euro Aussie. This is my chart of the day from last Thursday. Okay. And this is one of those charts that I think that, you know, you just got to pay attention to, because we're breaking out of this. This is a consolidation that has taken place really over the last 2 months in the Euro Aussie. Now, I'm not fully on board with a move higher out of this triangle till we're above 157, but it's not just the Euro Aussie here. It's also the pound Aussie. The pound Aussie was my chart of the day yesterday, and we're probing, resistance as well. Now, I like these pairs on the long side, because I think the sterling and the euro both look more constructive than the Aussie and the Kiwi, but also because of the extended nature of where equities are at. And I know that the S&P is really struggling with the underside of the broken wedge. So let's go back to the S&P. You can see how we're at the underside of the broken wedge. If we make a lower high in the S&P and we eventually, break back below 4,000, the first currency pairs to break higher, in my opinion, will be the pound Aussie and the euro Aussie, which are already suggesting that they're ready to do so. So if we do see a little bit of risk aversion, let's say we do get a little turnaround Tuesday today, I think that these currency pairs are primed to break out. You also have the RBA meeting minutes that are happening this not today, so it'll be Thursday morning, I believe, I'm sorry, it's Aussie employment, my bad. Aussie employment, and then retail sales. I don't know why I was thinking the meeting minutes were already this week. The Aussie employment is actually Thursday morning, Wednesday night here in the US. So if we get a move like today, and you start to see a move like Euro Aussie above 157, pound Aussie, breaks above 180, 250, 183, and then we get a weak retail sales number, or a weak unemployment, or weak retail sales, or both, we could be a lot higher by the end of the week with both of these pairs. So I think that these are prepped for a breakout, and I just wanted to bring them to your attention because I actually think that the Aussie and the Kiwi continue to underperform the rest of the majors against the dollar right now. And it's something that I think needs talking about, especially with equities. S&Ps are still, holding up, but we have not, taken out these highs, and we are, I don't know. It's just some thoughts.
Like one thing I want to say, sorry to interrupt.
Yep, go ahead.
Our friend Scott is asking, what about my Bund target, which I'm short the Bunds, everybody knows who's been listening. The previous lows, 167.50, just above that is where I'm taking half of my position off. So we have, if you go for a little bit further back, I mean, we are at a pretty interesting zone now, but I'm going to wait for the, there's another low. Where was it? Hold on. There's a March low, if I recall correctly, which was 167.50. I have to check it out again, but I am close basically. So I'm going to be, maybe my feed is wrong here. It's showing me a low at 160. Anyway, I'm going to have a look at it, but we are at levels where I'm starting to get a little bit trigger happy. If I see any kind of reaction, I might take half my position off.
Yeah, I mean, you've been short Bunds for a while, and I know, and guys, here in about a minute or so, we have housing data, building permits in the U.S. So let's go over here, and I have to say, and I know I mentioned this yesterday, and maybe it's just more of a product of where I live. Home prices where I live have actually jumped about 40% in the last 2 years, and that's nuts.
Sell.
No, yeah. If I was going somewhere, I mean, if I was going to move to like Nebraska or something, it wouldn't be such a bad idea. But yeah,
the question, Dale, what makes you think they're stopping?
Well, it just doesn't matter if you live. I'm not a real estate investor, never have been, but it's not a. It's I feel bad for like the generation that. Like the kids that are just graduated college or in their I guess they would be millennials, or what's the next generation behind
Xers?
No, after X, I think it's Z and then millennials, if I remember right.
So, but if you're in your early 20s or maybe in your 20s and you don't own a home, I mean, you could see why there's a big rage against the machine right now, because I mean, the amount of money you have to come up with to buy, to live the quote unquote American dream in the US anyway, as an American, it's really difficult to do. I mean, how do you I mean, how do you buy a home right now? How do you even get married when, oh, geez, the housing data is a little weaker than expected? I don't know.
See, should have sold it.
Yeah. Well, that's it. I'm
Oh, you
out.
missed the
I'm gonna
top.
go. I'm gonna go hit the bid on my house. No, I'm
Okay.
just saying that if you don't own a home,
I have a
it's
pup tent.
really, really, really difficult for
Yeah.
people that. I mean, it's just widening the gap. It's crazy. It's crazy. Anyway, all right, guys, I'm gonna pass it over to you,
Besides
Dale.
universal income, they're going to have universal mansions for everybody.
Universal income might, but
Yeah.
anyway, hey guys, make sure you visit Pepperstone Securities. By the way, I'm actually going to start filming a little segment with Chris Weston in Australia every week. It's going to be a 10-minute segment and it'll be fun. It's going to be something I think you guys are going to really enjoy. I actually met with them last night before I went to bed because they're in Australia. So it'll be fun. Anyway, Pepperstone Securities, make sure you visit them. And if you're going to open an account, do it right through here. You can get Forex Analytics for free for a few months. And I'm going to pass it over to you, Dale. And
All right, go film that in Aussie land. That'd be fun.
What's that?
Go do it live in Australia. Film your videos. That would be fun. Huh?
I haven't been in Melbourne in like 10 years, and I would love to go back.
I haven't been there in ever.
All right. See you guys. Enjoy today's interview.
Thank you, buddy. 15-day quarantine, not for me. I'm vaccinated. Anyway, Alex, my trading warrior brother.
Hello.
How are you?
I'm good.
How are you, Mr. Gann? So what I remember from our last interview was April was going to be an important time frame because that was 1 year from the COVID crash. So, right? Is my memory okay for an old man?
Yeah, quite okay.
Okay. So here we are in May. Go ahead and tell us what we're looking at. Looks like you did a little work for us today, Alex. So
Yes.
looking forward to what's on your radar.
I want to concentrate on cycles and timing today. I won't repeat those GAN basics again and again and again, because I think we have had a quite important time now. As you can see here, I brought up a Dow Jones chart. There is currently a high. We have a high in, and you said it before. DAX, the German DAX, is the stronger part at the very moment. Why is that?
Why is the DAX outperforming?
I personally have two theories. The first theory is that DAX just catching up to the previous move of US markets. And
the dollar?
Second, we have dividend season here.
Flows into euros for a while, translate into stronger gains for euro-denominated assets.
Which is also a good point. Yes, but dividend season here is not so unimportant because, as you know, DAX is a performance index, and all these reasons.
Can you turn your audio up just a little bit, buddy?
Yeah. Is it better now?
Oh yeah,
Good.
Great.
So I stopped at the dividend season. DAX is a performance index, and all those dividends paid out are going to be reinvested into the index itself. So it's a seasonal thing now. Yeah.
Okay, dividend season. So it has to do with maybe stocks going ex-dividend? Or
Correct.
this is dividend season now when they're reporting earnings?
It's the time where the stocks are going ex-dividend and
Oh,
those
okay.
dividends are reinvested into the index.
Okay. All right, so I see 180 days, 180 degrees, half rotation, change
Correct.
in trend. Is that where we're at?
Yes, this is correct. This is
This-
Dow Jones Industrial. This is working for the Dow. As you might know or not, DAX made another all-time high this morning, but it wasn't sustainable at the very moment because we are like 100 points off the high. Yeah, the sitting high in this time frame I'm looking for, the 180 days currently implies for the US markets, which is in fact the leading market. So when
Which is
I'm doing
around
all those,
around the total lunar eclipse, I'm having a hard time following you. So are you looking for a high? I see you have total lunar eclipse. Is that May 21st,
correct? 26th.
26? Okay, I saw like 21 down there. Okay. So it's May 26th. It's a total lunar eclipse, and you're saying something about that markets turn on these eclipses. So you have other examples of turns. Well, I mean, there weren't that many turns. Mercury retrograde, total lunar eclipse, no solar eclipse on there. So, Alex, why don't you, in your own way, instead of me putting words in your mouth, here we are in the Dow. Are you looking for a new high in the Dow?
No, personally not.
Okay, new high in the S&P?
No.
Okay, NASDAQ was the weakest sister here in the US besides Russell. So we've peaked before the eclipse, is what you think?
Yes.
Okay.
I think this high might be in right here at the end of the 180-day cycle. So
Okay.
we'll see.
Okay.
So what do we have here? I also want to talk some macro things today. I mean, everybody knows this market is on fire because of those guys here.
Yeah.
You agree with me?
Yeah, I do.
It's the same here in Europe. So yeah.
You know what people will get confused about? A lot of people think tapering is tightening when tapering is just less buying.
Mhm.
It's not reversing and selling and doing, reverse repos and things like that. So, okay. All right.
I have another interesting thing here. I tried to put the US GDP in relation to total public debt. That's the blue line here. And this is S&P 500.
Yeah, quite a divergence.
Yes, that's the
Is
point.
that what you're? Okay.
Yeah, that's the point.
Okay, so it would be any correction in the S&P would be like a reversion to the mean.
Yeah.
Type of trade. And where do you think that would take it back to about 2,500? The S&P.
I try to show you a good. So where is it now?
Your charts are beautiful, Alex.
Thanks. So I'm just bringing down the zoom bar. I have a monthly S&P. No, that's not that I want to show. Yeah, this is good. This is good.
Wow, there's a lunar eclipse right around my birthday.
So I have this scan sequence starting from the post-financial crisis low in March 2009.
Yeah.
With the miraculous number 666 on S&P, everybody knows that. That's the ideal, the dotted line, the dotted light blue line is the ideal 45 degrees.
Yeah.
So price and time would be in harmony at this line. So we are quite above it.
3,500 that comes in, 3,800. Okay.
Yeah, around
All
this.
right.
When we look at the Dow again, because that's the same line, the timing is the same. It served as support here.
Okay. All right.
And so also for the Dow Jones, it would be the first correction target for me.
What if we have something like we had in COVID from up here or even a little higher? That could just be a correction of the advance from the COVID crash. Say, for example, we have a break like we had in COVID last year in the spring from wherever we peak now, you know, have some type of symmetry with that. That would take us down to what, about 2,500, wouldn't it?
Well, that would take us at least down to the COVID lows. But not in the same, in the not same aspect like time. So
it would be more of a long, drawn-out grinding decline than a crash.
Yeah, correct.
That's what you're looking for.
I mean, it should be a balanced decline, in my opinion. It was too fast in February, March 2020.
Yeah. Okay. All right. So, what's your preferred short? Right now, mine is NASDAQ. Has been for a few weeks. I think it's the first to peak. What's your preferred short in the indexes? All of them?
I recently I really got a fan of the Dow Jones. I mean, it's a beast, and many of my colleagues don't like to trade it. But I don't know.
Do you like the Dow?
Yeah, I'm getting in love with her.
Okay, in love?
Yeah.
It's beautiful.
Yeah. I mean, I'm married to DAX, you know, but she disappointed me.
Oh, the Dow is your mistress.
Yeah.
You European guys who can get away with that. Okay, so anything, so the DAX you think has topped, huh?
Yeah. Well, I don't know. I mean, the DAX is that a joke right now. I don't know how to say it better. Yeah.
Well, Nick X says that what was it? Let's see, that the most volume, the biggest money on earth goes into the Dow. Nick X says, okay, so you're not alone for liking the Dow.
Yep.
Okay. All right. Anything else you have a crush on? Like gold? What do you? I know you mainly follow DAX, but are there any other asset classes? And tell me if you agree with this. I've been talking about it's really all one market, Alex, and everything went down into the COVID crash, and in different magnitudes, everything's gone up, right?
Yeah.
So, I mean, if we really have a bear market in S&Ps, wouldn't you expect everything to come off except maybe the dollar?
Yeah.
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 Okay.
I agree. I agree. I mean,
Okay.
I brought another chart up here because it's quite interesting in terms of cycles. Again, cycles and timing. This is a monthly chart of the
Uh-huh.
S&P. Going back 360 months, because 360 degrees equals
Okay.
to a full circle, you know, again, etc., etc.
Uh-huh.
Going back 360 months, we are here for the starting point of the sequence.
Right.
That's again the ideal 45 degrees line. Just look at the arrows, how well this fits. So this gives me some reason that this is quite a heavy, quite some resistance here at the 1.1.
4,400 up there.
Yeah.
I know a lot of people looking for that
No,
number.
there isn't top. There isn't top for 238, I think. Yeah. I mean, it exactly touched the 45 degrees line.
Yeah. Okay. So
This is absolutely brought to the point of timing, not of
Yeah.
price. So this is only in terms of timing.
okay. All right. So do you think there's a possibility that we could make some additional highs into the month end, into the eclipse? I mean, you believe?
It is
Huh?
possible. It is possible. Sure, it is possible because everything is possible in this market.
Well, I mean, that's kind of, you know, I'm thinking there's another high in S&Ps.
Yeah, but I'm sure it's pretty much exhausted by now.
Okay. I know I am. Do this. Do this for 40 years.
Yeah, I can imagine.
Okay. Are you following any of the manias, Alex? I mean, what would Gann say about crypto and NFTs and SPACs?
You
What do you
got
think
me
he
now.
would be thinking, huh?
You got me now. No, I'm not. I'm absolutely not into crypto. No.
Yeah. Okay. And
I'm
you
not
know,
saying I'm not saying it's bad or something, but no, I'm concentrating also from my day job at the bank. I'm concentrating at the big indexes and yeah, that's it basically.
okay. How are you drinking decaf or?
No, never,
Okay.
never.
Okay. Good. I thought you may have been. All right. So, anything else you want to share with us today, buddy?
Those 4 points probably here on the right side.
Inflation, unemployment.
Yeah, just to think about
Yeah.
economically. The markets are at all-time highs. What about inflation? What about the employment situation? What about the central bank balance sheets and the national debt? I mean,
Yeah, it's kind of a toxic mix for having parabolic prices.
yeah.
Is that what you're saying?
Yeah.
Is
I mean,
okay.
everybody knows that, and I think it's just a matter of
Well, what
time.
about the vaccine and people moving around again in America and starting to in Europe? You don't think that could fuel another hurrah, or it's already baked into the market? The market was anticipating this reopening. Wouldn't the biggest disappointment be, and I know there have been some breakthrough deaths of fully vaccinated people. Wouldn't that be something that would turn the market on its head this fall if there was a variant that the vaccine was not effective against? What do you
Yeah,
think?
I'm sure most of the vaccine euphoria is priced in at the moment. I mean, if you look at the share prices of Pfizer, AstraZeneca, or Moderna, one could assume that they are skyrocketing 200, 300, 400%, but that's not the case. So they are pretty much there as before November 9th, the famous vaccine spike. So actually, also here in Austria, we are opening cafes, bars, and hotels tomorrow. And there will be, and that's not bad. There will be some travel again in summer, around the summer. But I fear that latest in September, numbers are increasing again, and the variants of the virus are most probably dominant, and the vaccine won't be as effective as to the original variant. So yeah.
Okay, so just for me to, kind of get the main bullet points of this interview, you believe markets have peaked, and we're in that time cycle where we've already peaked, and the lunar eclipse could be maybe a failing rally up there on the eclipse. Is that what you're thinking? Maybe a failing rally, not quite new highs?
I mean, it's an important mark here. In terms of timing, it's really critical right now. As long as US markets do not put another all-time high in, the direction is down in terms of timing.
Okay. Oh, and how long do you think this could play out? For years from this high? For a year? For 8 months? Maybe into the end of the year? I mean, you're the time guy. So if this is a major high, and not just a high for a, run of the mill correction, is this a generational high?
It feels like, and also the economic situation and also my logic tells me that the only healthy correction in the market would be a long correction, not 4 weeks, not 2 years. I mean, there is not much left what central banks could do against decreasing stock prices. So
they couldn't. The Fed hasn't come in to buy shares yet, unless you believe in the plunge protection team.
Yeah,
that may be an option, don't you think? I mean, they've done it in Japan, where the central bank comes in and buys stocks. Do you think our Fed will do that, or the Bundesbank or ECB would do that?
At the current law, at least the ECB is not allowed to do that.
They're not allowed to. Okay. All right. Important interview, Alex. Alex is declaring a high. Thinks that any rallies here will be failing rallies, and that we're going to have not a crash, but a traditional grind them down bear market.
Correct. Yeah.
I got you, buddy.
Mm-hmm.
See, I'm a pretty good translator.
Yeah, you're perfect.
What language were you speaking? I'm kidding you. All right. So you do better with English as your second language than I do with anything as a second language. Alex, it's always, look, it's always a pleasure to see your charts. I know a lot of work goes into it, and you were, you said last time that April was going to be an important time frame, And I think NASDAQ peaked late April, early May. So, I mean, you're there for that, and appreciate you coming on and sharing your work, buddy.
Thank you so much for having me.
Okay, and good hunting, and hope that you clean up on the spare moves that you see coming.
Yeah.
Okay. All right,
Thank you.
Alex. All right, everyone. That's a wrap for Turnaround Tuesday. Looks like the metals are coming off a little bit, and you can join the team. You could join the team in 20 minutes for the morning edge, and Blake will break out the bias chart, and you have the rest of the team to answer any of your questions that you have. Good hunting. Enjoy the rest of the day. And don't forget, don't just count your pips, count your blessings, and see everyone tomorrow. Oh, yes, about a book recommendation. All right, how about Market Wizards? How about In the Zone, Mark Douglas? How about those two? Okay. You're welcome, Gorkum. I'm sorry, I don't. Trading for a living, there you go. Okay, that's another good one from Khalid. All right, everyone. Good luck the rest of the day. See everyone tomorrow. Adios. And join the team now in 19 minutes for the morning edge. You got to be sharp in the morning edge. Shalom, Amira. Stay safe, bro. Thank you, Steve. Glad you enjoyed the interview, bro.